And welcome aboard. It is another Sunday market update, and we're so glad you can join us wherever you may be in God's great garden on this Sunday, the 3rd of April, would you believe? My goodness gracious me. 1/3 of the year. See ya? Or is it a quarter? Nearly a third. Getting there. Maths aren't real good on a Sunday, I've got to say. That's why we rely on charts so much. And speaking of charts, oh my goodness gracious, Ignatius. Never seen so many spinning tops in my entire trading career as I can see on the weekly charts of last week. Just a market that's got absolutely no idea where it's going, I believe. Anyway.
Geoff, hi. It's great to hear you. Can we see you?
No, he hasn't paid his bill. The lights are off. The lights are off in Tasmania. The interconnector isn't working. And
that would be,
there we are.
That would be because of that. My sincere apologies. I haven't got my driver's license on a Sunday, obviously. Anyway, as I was saying, I've never seen the market so indecisive over a period of a week. I wonder how that's going with you guys. First up, we're going to go to New Zealand, where Australian women have just won the cricketing one-day International World Cup. What a tremendous effort by our girls. Good on you, girls. And Julian was there, front row. Oh, no, he wasn't actually doing something.
I wasn't, but as it happens, I've watched quite a few of the highlights. And actually, I have to say, the Australian ladies looked like they were the winners right from the very start. They were pretty dominant all the way through the tournament. So they were the ones to beat all the way through. And they proved that with pretty amazing performances. So good on them.
Yeah, I thought their fielding in particular was just absolutely outstanding. And good to see. Mate, you're going, speaking of cricket, we're off kilter a little bit, of course. I believe you're off kilter a little bit this week as well. What's going on?
Well, thank you, Geoff, and hello, everybody, wherever you are in the world. Hey, guys, for those of you that have just sat through I'm going to stop calling it my Trader Cafe, but for the sake of argument, my Trader Cafe. For the last hour, we were talking about building trading systems, and we also had a quick scoot around the markets with some of the crazy things that's happening out there. Lots of interesting markets, lots of volatility. But I want to focus on today two small things. Well, actually, they're not small things. They're pretty big, but two key things that are going on at the moment. So some of you may have seen the unemployment numbers last week in the United States. And remarkably, they were touted as being some of the best there's been for quite some time. This to me is very interesting, but has absolutely no relevance when you look at the leading indicators out there in the States, right? So if that is the case, if more and more people are getting jobs, why is consumer confidence so low? Right? It is absolutely through the floor. And for the record, when you look at the volumes of transactions for durable goods, so also think about things like cars and stuff like that, the volumes, not the value, but the volumes of those transactions are falling away very quickly. I am beginning to believe that I think right now the US may be in the very early stages of an initial move to recession. I say this with lots of caveats because we're not there yet, and unemployment is a lagging indicator, so it will come along for the ride at the very last minute. In the meantime, there's some leading indicators which are clearly turning down, and I don't think that, I'm pretty sure that inflation and what is going on in the rest of the world has got quite a bit to do with it. Americans overall are grumpy lot at the moment, and they seem to be expressing that grumpiness by either not buying things or by really preferring to sit at home and not do anything at all, maybe because they can or they can't afford it, sadly. So there's lots of things happening in the States. I think inflation is biting, not a good story there. So how do we know, right? What is the indicator out there that's telling us, right, that something like that is going on? Well, this is the US Treasury Bond yield, the 30-year US Treasury Bond yield, simply the most important chart on the whole planet. Why? Because it sets the interest rates for assets worldwide. So higher interest rates, asset prices fall. Low interest rates, asset prices rise. Okay, so what is going on in the world? What does the leading indicator tell us? This is Friday's price action and also some of the price action from the previous day. Look at what has been going on in our land. So this is yields down, prices up. Interest rates down, not up, on the back of an amazing unemployment figure. How can you have this, right? How can you do so well with an unemployment figure and then completely reverse in the later on in the session and then see interest rates going down? Well, it's because the market is looking through that unemployment number to what's next, and what's next isn't as pretty. Okay, so when we look at the very short end of the interest rate market, and this is the implied interest rate for June of next year, so June 23 in the Eurodollar market, we are seeing, and it's again here the inverse of price, right? So as prices fall, yields go up. As prices rise, yields come down. You see here, this is a interest rates rising in the short end. Everybody who reads the newspaper understand exactly what I mean by that. And then on Friday, we saw another big leg down as a result of that so-called high unemployment number. So what's happening here is that curve is shifting. Okay, the US interest rate curve is starting to shift around and go flat to slightly inverted, pivoting around about the 3 to 5 year mark, where it's starting to go inverted. Okay, so for those who don't know what that all means, please look at one of my podcasts I did about 3 months ago when we talked about the shape of curves and why it was important, and why inversion of the curves is a precursor of problems in the economy. Again, it doesn't take a genius here. Inflation's running rife in quite a few countries. People are not as rich as they used to be, and that bothers them, right? And in some cases, the poverty levels are actually getting quite crazy. So, without wanting to labour a point, I think probably there's some quite bad things going on in economies around the world at the moment, notwithstanding what's happening in Central Europe, that is giving us cause for concern. But at the same time, the central banks are happily going on their way, raising short-term interest rates in some kind of I don't understand what's going on type of way, right? So, lots happening. Really interesting story. Let's watch these ones. Why are they important? Okay, they're important because the US Treasury Bond, this is a seasonal time for prices to start to rise, yields to start to go down. There is a cycle point coming at the beginning of April. That's the reason why I quite like the look of this now. So I'm looking for an opportunity to perhaps get involved in the Treasury Bond market. I'm also looking for these short-term interest rates here, the Eurodollar ones you see in front of you, to stop going down. How would I know that? Well, we could use some kind of bullish momentum divergence to give us a bit of a clue. The market stabilizes for a bit, or just use the old technical watching a chart and seeing what happens type of thing, right? Looking for some false breakouts. That's one thing I want to talk about, Geoff. The second thing that is going on, and this is super, super important, and you have to conceptualize this a little bit more closely. I'm going to go to a monthly chart here. So why am I going to monthly charts, you're going to ask? Well, this is Chinese yuan against the Japanese yen. Not only are we trading at levels where the Japanese yen is the weakest it's been since 2016, it's also the weakest it's been since something crazy like 1980. Okay, just incredible charts of where the market is. There is going on a movement, a realignment of currencies that you have to be aware of. And we'll look at another couple in a second, right? A realignment is taking place, okay? How is this important? Well, when one currency devalues its currency, it's doing it to maintain the economic growth that it has in the country. What happens to the country that is revalued up against it? Well, that suffers, and that has less economic growth simply because the competitor is able to take more, export more into the other country because its goods are effectively cheaper. So when you look at this, this is good for Japanese growth, bad for Chinese growth. At the time when the Chinese market is already potentially struggling from some other issues going on in the credit markets as well too. This is going to make a new interesting play very important, right? And of course it's China's closest economic trading partner, and there's a significant volume of goods that flow back and forth between the two of them. This is a very important shift that we're seeing. Okay, you need to look at the central bank statements for the Bank of Japan, and also, for that matter, the Swiss National Bank as well too. Recently, you need to understand what the Swiss were saying, because Euro Swiss on the monthly chart, right? This is the euro against the Swiss franc. The Swiss franc is trading at its strongest point for goodness knows how many years. I mean, I don't know, 10, 20, 30, 40, something nuts, right? It's even getting down to the lows of that Swiss franc flash crash that we had a few years ago, for those of you that remember that. Okay, so all of these things are important. What is this saying? It's saying this is the reason why the Swiss National Bank left interest rates unchanged at minus 75 basis points, minus 0.75%. They left it unchanged. Why? Because they are thoroughly hacked off that the Swiss franc is continuing to rise against all other currencies. Why? For exactly the same reason as we saw with that Chinese yuan, Japanese yen chart, okay? Why? Because the Swiss franc is strengthening. That means that industry in Switzerland is not as competitive against its competitors in Germany and other parts of Europe. So consequently, Swiss economy does poorly, European economy does better. What is happening is the flows are all going to Switzerland because they have a lower inflation rate. The currency is naturally stronger than all the other lot who are depreciating like crazy. And the EU, I think, are going to have inflation at 7%, I think, later on this year, which apparently is the highest rate it's been since the 1980s, right? Insane levels of inflation. Okay, so lots of change coming, guys. Lots of things happening out there. Geoff, I'm going to wrap it up there. But this is why looking at your monthly charts from time to time is super, super, super important. There are economic changes in place here. And boy, oh boy, is there a potential buy in the Swiss franc coming up without a shadow of doubt? Is there a potential sell, right, in that Chinese yuan, Japanese yen? So is the yen getting cheap? Yeah, I think the yen's getting cheap too. Let's look at our seasonals, guys. Look at the cycles and see where they're starting to think about bottoming for some signals to think about maybe these trends reversing. Maybe. I always put maybe because we have to see the price action first. But that's just a couple of things I wanted to highlight to the team, Geoff.
Cheers, mate. That Euro Swissy chart is the first chart I'm going to have a look at in a few moments myself because of the exact reason that you just mentioned. In 2015, shall we ever forget that day when 3,500 pips, I think, when they just decoupled the euro and the Swissy, it just went kerbang, and a lot of people suffered. A lot of people, well, a few people probably did very well from that, but that was a day and a half, I can tell you. And I do believe that we are pretty much bang on the level where that the retracement after that flash crash, as you called it, actually stopped. I think is a very significant level, and I'm 100% in agreement with you. I think there's a potential long coming on that pair. Thanks, mate. Much appreciated.